Assalamualaikum and very good day to all. I'm Shahyuti Mohamad Adnan, your lecturer for this class. Our discussion today will focus mainly on issues in accounting for agricultural business. By the end of the lecture, you should be able to discuss accounting issues of the business, mainly on farm animals or livestock. We are going to cover two main issues in the agriculture business. First is the fair value measurement of the biological assets, i.e. the farm animals, and second is the government grants received by the business entity. Let's look at the first issue, which is the measurement of farm animals, or in accounting terms, they are referred to as biological assets. Basically, in the previous videos, you have learned that the measurement for biological assets such as lamb, sheep or cattle is fair value less cost to sell. That is the value that people are willing to pay for the animals after taking out all costs related to selling them. The generally accepted accounting practice defines fair value as the price that would be received to sell an asset or paid to transfer a liability, which is known as the exit price in an orderly transaction, not a forced sale, between market participants, i.e. market-based view, and the measurement date, that means current price. That means we have buyers, we have sellers, they are in the market, and both parties agree on some value to pay for an item on a specific transaction date. The issue now is that the accounting standard does not establish a priority on the basis of fair value measurement for biological assets or agricultural produce. Thus, guidance on fair value measurement should be based on the general standard on fair value measurement. Now, let me give you an example. Say, I just started an agriculture business. I wanted to breed goats and sell goat milk. So, I started with buying a group of 1-year-old goats. It cost me 5,000 ringgit for 10 goats. So, the cost of the goat is 5,000 ringgit. It is simple because we have learned in previous video that the cost of the biological assets during the initial investment is the purchase price. That means the consideration price. Right. The subsequent measurement for the goats is also fair value. That means after having the goats for some time, I feed them. I take care of them so they grow. Now the age of the goat is 2 years old and I have to record in my report the fair value of 2 years old goats. How do I value them? Yes, I have to look at the market value. Say, I breed my goat in Terengganu. People are willing to pay for 600 ringgit to 700 ringgit for a 2 years old goat. Therefore, the value of the goats that I have is around that figure. What if I breed my goat in Terengganu and the headquarter of my business is in Kuala Lumpur? People in Kuala Lumpur pay higher price for a 2 years old goat. It can reach 1,000 ringgit for each goat. So, which is the fair value of the goat? 600 ringgit or 1,000 ringgit? That is the issue with fair value of living assets. Fair value is a market-based measurement. It is not an entity-specific measurement. Consequently, the entity's intention to hold an asset or to settle or otherwise fulfill a liability is not relevant when measuring fair value. Let's make the previous example a little bit complicated. The goats that I have mixed them with other goats bred from Australia. Some females get pregnant. I also give the goats vitamin, mineral and nutrients to make sure that the milk production is at the best quality. So I can't determine the market value of the same goats that I have because I think that my goats are special. Moreover, I have no intention to sell the goats. So why I have to bother thinking of their market value? That's the difficulty of fair value measurement. Now, let us look at how to solve some of the previously mentioned problems. To determine fair value, an entity has to fulfill three conditions, which are A. Grouping them according to their significant attributes like age group or quality. B. Fair value is determined independently. And C. Existence of active market. This is what we have discussed in relation to the value of the 2-year-old goats. If an active market exists for a biological asset or agricultural produce, the quoted price in that market should be used as the basis for determining the fair value of that asset. The previous example that I used was about goats, i.e. the biological assets. How about the produce? The milk. How to determine the value of the milk? Yes, similarly, we have to use fair value at the initial recognition. Subsequent recognition of the milk is the lower of cost or net realizable value. If different market exists for the biological asset or agricultural produce, an entity use the principal market, or in the absence of a principal market, use the most advantageous market. An entity is not required to make an extensive search for the principal market, as it may be assumed that the market that it normally enters into in selling the biological asset or agricultural produce is the principal market. This is the case of different price for the goats in Terengganu and Kuala Lumpur just now. The principal market here means where is the goats normally traded? Is it in Terengganu or Kuala Lumpur? If Kuala Lumpur is the principal market, so the value of the goat should be the market value in Kuala Lumpur. Gain or loss is obtained if there is a change in the fair value less cost to sell of the biological assets between reporting dates and initial recognition. The gain or loss is recognized in the profit and loss and other comprehensive income statement for the period gain or loss will arise. As the case of goats just now, say the value of the 1-year-old goats at the initial recognition is 500 ringgit each. After having the goat for 1 year, the goat now grows to 2 years old. So its fair value increases to 700 ringgit each. Therefore, the gain of 200 ringgit for each goat should be recognized as gain in the profit and loss statement. Only consumable biological assets that are traded daily have active markets, such as cattle, sheep, and deers. In the case where market value cannot be determined, we have to use cost. The next slide narrows down the issue. As the diagram shows, in the case where fair value cannot be determined reliably, the biological asset shall be measured at its cost less any accumulated depreciation and any accumulated impairment loss. That means, if we really cannot find the market value for specially bred animals that rarely traded in market, we can just use cost to measure the value of the animals. In this case, the business owners can calculate the amount of money that has been spent to grow the animals. This cost should be accumulated and measured as the value of the animals. As I said, This is a general rule for fair value measurement. Of course, it is very difficult for us to think about accumulated depreciation of biological assets. It does not make sense, does it? Biological assets are living creatures. They grow and get bigger in size and value. So we do not open accumulated depreciation account for these assets. However, they may be amortized. For example, the biological assets may be amortized based on its fertility period. Let's look at the chicken farming at QL Resources Berhad. Chicken in broiler farms are measured using the lower of cost and net realizable values. However, chicken for breeding purpose or laying eggs, called breeders, they are measured at lower of cost, less amortization expenses and net realizable value. The breeders were amortized for a period of 44 weeks. Biological assets that are measured at cost also need to be impaired. For example, when the animals have been infected by virus or some bacteria, it is very important for the business to estimate the value of the loss and thus write down the value of the animals. When the animals stop producing or degenerating, business owner normally consider selling the animals for meat or dispose them. The second issue is related to government grants. Many farmers in Malaysia received grants or subsidy from the government. The subsidy can be in terms of biological assets, relevant medicine and stocks. How to measure a government grant received by the business? If an entity receives the government grant in respect of a biological asset that is measured at fair value and the grant is unconditional, the entity shall recognize the grant as income when the grant becomes receivable. But if the grant is conditional, the entity shall recognize it as income when there is reasonable assurance that the conditions are met. If the grant is received before conditions are met, it shall be recognized as a liability. That's all for today. In the next video, we are going to learn about the disclosure requirement for animal farming. See you next time. Thank you. Bye.